Hello and good evening. This is Technical Indicator from iHub's Penny Stock Express. You can watch this video in high definition. Just expand and select 720p. This will be a tutorial on the chart pattern ascending triangle, which is a bullish continuation pattern. Stock of choice is PCFG. If you've been hanging out over at the Express, you would know that we put this one out recently, and lucky enough it broke to the upside, so it makes a perfect chart pattern ascending triangle for the tutorial. Alright, let's talk about the four categories that are listed right here: trend, top horizontal line, lower ascending trend line, and duration. So your trend is right here. It breaks above the MA20, so you have an uptrend, and it continues above that middle Bollinger Band or MA20 for quite some time, so it qualifies as a trend. Now you need a top horizontal line which sets itself up here off of 0.026. Then you need a lower ascending trend line, which essentially is getting higher as it goes. And then you need some duration, usually a couple of weeks to a couple of months. Now, the reason we call it an ascending triangle is because if we connected these two lines here with the dotted line, and then it eventually connects up here at the hypotenuse, you would have a right triangle. And therefore, you have an ascending triangle. So what are we talking about? Well, you should have at least two reaction highs, RH1 and RH2. You should have two reaction lows, RL1 and RL2. Your reaction lows should be getting higher as they go. You can see that they do, 0.0128 and 0.0152. So as this coils, we're looking for a breakout at some point near the hypotenuse or where the triangle meets, which it did. Essentially what we're talking about here is the top horizontal line represents overhead supply that prevents the security from moving past a certain level. This is essentially resistance. Even though the price cannot rise past this level, the reaction low continues to rise. It is these higher lows that indicate increased buying pressure, and it gives the ascending triangle its bullish bias. Now as the chart pattern develops, volume continually comes into the stock at lower levels. But then you have a contraction, and when that volume contracts, basically you're looking for a break of the top trend line, which was the case here. It broke out for about 70%. It's that easy. It's one of my favorite chart patterns, and you hear me refer to it over and over when I annotate and do video charts. So look for these type of patterns in the stocks that you're looking to trade. It'll increase your odds of being successful. The last thing I'm going to do here is just draw lines connecting the reaction highs and lows. So if we start the line here, you can see that we make a reaction high, and then we have a reaction low. And then we have reaction high number 2, excuse me, there we go. And then we have reaction low number 2. And you can kind of see that it's coiling, or the space between the two lines is getting tighter, and essentially the pressure is building. The buyers are gobbling up shares. Declining volume is a good sign. It's an accumulation pattern after a quick move. And then when you get that confirmation volume, it usually pops to the upside. Very, very bullish continuation pattern. Definitely one you should have in your back pocket. Join me over at the Penny Stock Express. I'll be breaking down more chart pattern tutorials in the near future. Hopefully this one on the ascending triangle will help you out. I feel it prudent to include a disclosure since I've been talking about our PCFG a lot. There you are. I currently have no position. I am not an investment advisor, and I was not paid to produce this video chart. Take it easy, everybody, and have a great trading session tomorrow.